At times in the stock market, good news is bad news. Let's bring in Dan Deming at KKM Financial. Dan, the jobs number came in strong. That was the good news. But the Fed is trying to fight inflation by cooling off the economy. Not so good. What can you tell us?
Yeah, it is a case right now, Angie, where good news is perceived as bad news, although I think it has a short-term effect in the market. We did see a negative reaction initially, but overall, the idea is that allows the Fed to continue to be aggressive in the interest rate camp should they feel the need to, and that's why the jobs number coming in stronger than anticipated, plays into the Fed mandate of stable employment, and we're continuing to see that. So I think that's why the market took a pause to the good news reaction as a negative due to the fact that it allows the Fed to remain aggressive if they feel the need to fight inflation.
What are you watching in the market this week?
Yeah, I think it's an interesting setup this week, Angie, because even though we gave up a little ground on the heels of the jobs report, nonetheless, the trends in the market are still positive, and we are holding above the 50-day moving average in the S&P and the Russell. So that's renewed strength here. That's the first time we've been above the 50-day moving average in a couple of months. So that's something I'm watching very closely. We do have some data points this week that the market's going to be focused on. Now, the other interesting dynamic this week, Angie, is the Fed's going into their quiet period. So we're not going to hear too much from them before that meeting a week and a half away. So again, the market will focus on economic data and just general trends, I believe.
Have a great week, Dan. Thank you.
All right. Thanks for having me, Angie.
Go to businessfirstam.com for where to see our show on TV.